Jai Hind, dear students. From this video, you are going to watch how to prepare the whole final account with the different adjustments. So don't forget to watch the full video. You will get a clear-cut understanding regarding how to prepare the different accounts with some special adjustments. So we have to go through the different problems. I had brought 3 different problems. Please watch the entire video. The first problem includes the whole details regarding the balance sheet. And remember what are the items we have to transfer from asset side: debtors, stock, furniture, machinery. And Naina's current account, it will be never taken because it will transfer to capital account. In the liability side, creditors will be transferred. Remember, only creditors will be transferred, and current account will be transferred to partners' current capital account, and workman compensation reserve will be shared between partners. Look at the additional information. Naina took over 50 percentage of the stock at 10 percentage less than. 50 percentage of the stock means 35,000 is the stock value. Half of the stock will be 17,500, and it is taken at a deduction of 10 percentage. And the remaining stock was sold at a gain of 15 percentage. So remaining 17,500 plus the 15 percentage of that 17,500. It will be shown as by bank or cash. Furniture and machinery, the realized at furniture 30,000 and machinery 50,000 is the realized value. There was an unrecorded investment. We will take it into the credit side of realization. Debtors realized 90 percentage only, and 1,200 were required for bad debt written off last year. It is the different adjustment. Just keep in your mind, out of the value of debtors, 90 percentage only realized, and also there is a bad debt. Bad debt means that will be deducted from debtors, and that amount is 1,200. We have to know how to adjust these two items. And there was an outstanding bill, repairs had to be paid, liability, we have to realize it. We have to prepare the different ledger account. First of all, please come to the realization account. So as we have transferring assets, debtors, stock, furniture, machinery, total value will be 1,60,000. And we are transferring the liability, creditors, bank overdraft, it will be in the credit side of realization. Then we are recording the selling price of different asset. Investment, unrecorded investment is there, that will be taken 34,000. Furniture 30,000. Machinery realized value 50,000. Debtors 90 percentage realized 22,500. But remember, stock 10,000 the realized value, 20,000 on 25. And bad debts recovered. Bad debts recovered means we are getting back the amount of bad debt. That shows the value of asset. So recovered value will be added. But if there is any additional bad debt, it will be deducted from debtors. And some part of the stock was taken over by Naina. That is Naina's capital account. And in the debit side, creditors realized value 20,000. Nothing mentioned regarding the creditors realization. Remember, if nothing is mentioned regarding the realization of liability, that indicates we have to settle the full account. We have to settle the account of that liability by paying the full amount. Remember that. So bank debtors also another outstanding bill that is given in the adjustment. Remember that. Bank overdraft is realized, creditors amount realized. We are finding the total of two sides, and the difference will come in the debit side. That means profit. It will be shared in equal ratio. Nothing is mentioned regarding the ratio of sharing profit between these two. So that is why it will be shared equally. And what is next? We have to prepare the capital account. So balance brought down of Arishi's credit balance, normal balance, but the Naina have negative balance. That is noted in the balance sheet, isn't it? And also we are transferring the workman compensation reserve. Workman compensation reserve sharing equally. The 15,000 shared equally. Realization profit transferred. Realization profit transferred. And the realization assets taken over by Nayana. And remaining amount it is not here because the account title is not capital account. It is the current account. Remember that. We are transferring this amount of current account to the capital account. We are preparing the current account. We have transferred the balances from balance sheet. Then actually in this question, the capital account is prepared as per the fixed capital method. I think you are remembering how to prepare the capital account under fixed capital method. So Naina's capital balance 12,462 that will be transferred to her capital, and Arishu's capital balance it is 23,287. This amount will be transferred to their capital account. So next we have to prepare partners capital account. The opening balances are there from the balance sheet liability side, and the amount transferred from current account. Arishi's amount from the debit to credit side, and Naina's amount from credit to debit side. Remaining amount will be transferred to bank. Remaining amount will be, we will find the total, and the balance amount in the capital will be transferred. For Naina 87,538, for Arishi 73,287. Bank account will begin with the opening balance 30,000. Then we will write the realization of the value of asset. Here the realization of liability, and also the balance to be paid for each partners from their capital account. So we will get the total 1,87,825. 1,87,825. So in this problem, few more adjustments are there which are different from the previous video's last problem. Remember that. We are going to the next problem. Here also the details of different partners are given. Their capital account. Just look at here. That partner X, Y's loan is there. Also O's loan is there. Remember how to adjust all these items. So from asset side we will transfer debtor's original value. This provision will be transferred as liability to the credit side of realization. Every time remember, if the provision is there, the provision amount will be transferred separately. Original value of debtors will be transferred separately to the debit side of realization. Provisions amount will be transferred to credit side of realization. We will transfer the next item, stock. Investment will be transferred. Building will be transferred. Goodwill also transferred. Goodwill also transferred to realization. And profit and loss account shows a negative balance of the previous year profit and loss account that will be transferred to their capital account. In the liability side, the creditors will be transferred. Bank overdraft also transferred to realization credit side. Investment fluctuation fund will be transferred to partners capital account. And what are the additional information? X agreed to pay the wife's loan. That means the liability taken over by partner. Firm's liability taken over by partner. Debtors 5,000 proved bad. That shows the realized value of debtors will be 12,000. How we are getting the 12,000? 17,000 minus 5,000, again it is proved bad debt. So we have to deduct it. That indicates deduction in the value of debtors. We can realize only the 12,000 out of 17,000 from debtors. Other assets realized: investment 20% less than its original value. Goodwill at 60%. Just take the 60% of the goodwill value, that is the realized price. One of the creditors, 5,000, was paid only 3,000. So what is the creditor's value? 8,000. From 8,000, the creditor who had to, for whom the firm have to pay 5,000. So for that 5,000, company paid only 3,000. That means the account is closed by paying 3,000. Remaining 3,000 is there, it will be realized in full. Building were auctioned 30,000 and auctioneer's commission amounted to rupees 1,000. It is also like what? Auction means they were sold it by through auction. By inviting maybe tenders, they sold that particular asset. And the commission have to pay, that is a liability shown on the debit side of realization. OI took over a part of the stock at rupees 4,000 and being 20% less than the book value. Being 20% less than the book value. So we have to find out what is the portion of stock that partner took over. And the remaining balance stock realized 50%. So it is something confusing. We have to find out first what is the portion of the stock which is taken over by OI at rupees 4,000 and what is the remaining portion. Realization expense, it will be debited in the realization account. We have to prepare the accounts. So first of all, we have to prepare the realization account. Items: goodwill transferred, building transferred, investment transferred, stock transferred, debtors transferred. Here investment fluctuation fund, it is fund, not reserve, so it is transferred. Debtors, provision for doubtful debt, it is transferred. Creditors transferred, bank overdraft transferred, and also ex-wife's loan transferred. Up to this ex-wife's loan. So typing mistake. And by bank, we are writing all the realized value of asset. Debtors realized at 12,000, investment 20,000, goodwill the realized value 6,000, building 30,000, stock 5,000. Means the remaining item asset is realized on that value. Remember that. So this total is 73,000. And the stock taken over by OI 4,000. And in the debit side, X settles the ex-wife's loan. So X capital 8,000. Ex-wife's loan is settled by X. And the realized value of different credit liabilities 6,000, bank order realized, and the realized value of creditors. What is that? 3,000 remaining and 3,000 for settlement of 5,000. Okay, so total it will be, instead of 8,000 it will be 6,000. And bank the realization expense and the auctioneer's commission 1,000. So total will be 1,15,000 and difference will come in the credit side, that indicates a realization loss. It will be shared as per their ratio 7,200 and 1,800. I hope it is clear. Then we have to prepare a small loan account. There we will transfer OI's loan account. Remember that. There will transfer the amount from liability side by balance brought down, and that amount will be settled. It indicates the amount of OI's loan is settled by the firm by paying through the bank. They are paying the amount, then we will write to bank. The account is closed. Remember, it is voice loan account. Don't forget to settle these type of items coming in the liability side of balance sheet. Next, we have to prepare the capital account of each one. By balance brought down 50,000 and 40,000. By realization, it is 80,000. By realization, the liability is taken 80,000 and 8,000. It is transferred from the realization account 8,000, and here the profit and loss appearing in the asset side, that will be shared, and a realization asset taken, stock taken over by partner, and to realization the loss, and the balance will be their bank. The balance will be their bank. That will be transferred to the bank account. And here the cash or bank account, it is a negative balance because we have taken the bank overdraft balance by balance that is appearing in the balance sheet by bank overdraft. Then the liability is taken over by the partner realization. Also, amount transferred from the realization for creditors, expenses paid, and OIS loan settled 3,000. The capital balances of each partner, and in the debit side, the balance brought down cash balance. It is negative balance. Sometimes it will happen like that. We have to write very carefully. For the realization of assets, remember the total will be 93,000. So please watch this video once again and do this problem by yourself to develop these type of additional informations are there what we have to do. Moving to the third problem. Here few partners are there. They commence their business and their capital are 50,000 and 40,000, 30,000. Profit and loss shared for 3:3. They made a profit of rupees 20,000 and 25,000 in 2008 and 2009. Each partner withdraw rupees 5,000 per year, and it will be on 31st December 2009. They decided to dissolve the firm. Creditors and cash on that debt. Creditors and cash. Creditors 12,000, cash 2,000, their balance. The assets realized rupees 1,50,000. Creditors were settled for 11,500 and the realization expenses were 500. We have to prepare the necessary account. Dear students, this problem is an example for the preparation of memorandum of balance sheet. In this question, it is the full question, but nothing is given in the form of balance sheet. We don't know what is the actual price of the asset. So what we have to do? Please be very careful. Here we have to solve the problem by preparing the memorandum of balance sheet first. So sometimes you will be confused. So these type of questions which does not include the balance sheet, at that time we have to prepare the memorandum balance sheet. Before that we have to find out the closing capital also. With the amount of opening capital and other information in the question, we will find out the closing capital that to be shown on the liability side of the memorandum balance sheet. So what we have to do? We have to prepare on table for each partner. So opening capital is there, that is available in the question. For A 50,000, B 40,000, C 30,000. We are adding the profit of 2 years. Adding the profit of 2 years, and it is given for them in their ratio 18,000, 30,500, 13,500. And also we are deducting their drawings from the amount 5,000 they are withdrawing every year. So 2 years drawings will be deducted. So 10,000, 10,000, 10,000. Then we are getting 58,000 as the closing capital for A, 43,500 for B, 33,500 for C. Why? Because we need this amount in the liability side to find the total of asset. Actually, it is not given in the question. So remember, only using this table. First of all, we have to create this table. With this table, we have to find out the value of capital. Actually, only few items like creditors and the amount of cash is given that is available in the balance sheet. But we need the amount of capital, and with this amount, we will find out the value of the asset, value of the sundry asset. So in order to, we are preparing the memorandum balance sheet. To find that value, we are preparing the memorandum balance sheet. Like the same format, only the title is changing. There we are writing the closing capital of different partners. X 58,000, Y 43,500. What is calculated using table? The total will be 1,35,000. Creditors values available in the question 12,000. And the value of cash is also available in the question 2,000. We are finding the total of the liability side 1,47,000. Deducting the 2,000, we will get the value of asset. Just look at here, the balancing figure in this item. It is this memorandum balance sheet is prepared to find out the balancing figure. Remember that. And the balancing figure is the value of asset, sundry asset, that is 1,45,000. The realized value of asset is there in the question, but we want to know what is the actual value we have to transfer to the realization account for the asset. So we have to prepare the sundry this memorandum of balance sheet to find out the value of sundry asset. Remember, very important thing, and sometimes it will confuse you. Please watch this video again, this section, to know the preparation of memorandum of balance sheet. And with the available information, we are preparing the realization account. As per the memorandum of balance sheet, we are, and based on the table also, we are preparing the next accounts. So the next account, one account is realization, capital account also we are preparing. In realization account, we are transferring the amount of creditors available in the question 12,000. Credit side. And in the debit side, we are transferring the sundry asset. Look at here. This amount what we have calculated through the memorandum balance sheet. And creditors is realized by deducting 500. So cash account creditors value, and asset realized value is given in the question, that is 1,50,000 realized value, and the realization expense is there in the question 500. Remaining amount will be shared between the partners. We are finding the total of the account 1,62,000. Remaining 5,000 will be shared between the partners A, B, and C. 2,000, 1,500, 1,500. So we have to prepare the capital account. So from that capital account, no need to prepare the capital account. Already we have calculated the closing capital using the table. That amount we have to directly transfer it into the cash account. Okay. So remember that the amounts what we have calculated, we have to transfer through the table. Okay. And also the opening balance will be transferred. A realization of the asset, a realization of the creditors, a realization expense, the capital balances transferred to this cash account, it will be tallied. In this problem, we have to remember the importance of preparing memorandum of balance sheet. Memorandum of balance sheet. Dear students, I hope this problem is very clear for you. For more ideas, you have to go through your textbooks, read maximum illustrations, do it yourself. Any doubts regarding these type of problems, you can comment in my YouTube channel. I will help you to clear all the doubts. Thank you for your patient listening. Thank you so much for your support. Thank you so much. Bye.